Good afternoon, 3rd of February 2022, 14:38 p.m. Nice sunny winter day actually, which is not usual here in this time. Anyway, for today, I have prepared a couple of things. I'm not sure if I will get to the last one, but let's see. So yeah, the markets, how are markets doing? Not so great, I would say. The recovery doesn't seem like a recovery in the crypto yet. I'm still not convinced at all that this is a recovery. I think we are actually heading down to retest the support, as I said many times before. In crypto, it doesn't look like recovery, but look at the stock market. The stock market actually recovered, exactly as I said. DJI, which I told you is the leading indicator, which indicates how the market is doing. The market is recovering overall, yeah. And S&P 500 is also recovering quite nicely, now only weekly 21 EMA. So yep, stock market looks like recovering. Crypto, no, crypto doesn't. Crypto doesn't recover at all. So it seems it's recovering, but let's have a look on some very known companies, if they are recovering or not. This is Tesla. Tesla was $1,230 and few dollars around. 1,243 was the highest on 1st of November. Since then we are in the downtrend, and now it seems a little bit recovered, but still we are not still above weekly 21 EMA. So Tesla didn't recover yet. Amazon high is probably here, 3773. Here it's 3762. Yeah, this is the high. So 3773 is the high. Here is the low, which is 2707, which is almost $1,000 difference. And it recovered a little bit, but not yet at all. We are expecting to bounce out of weekly 21 EMA. If it will go through, then that would be awesome, but yet it doesn't seem that way. Netflix recovered also. Yeah, so this is why you can see the recovery here. It's the cumulative recovery of average of all these recoveries. Yeah, some recoveries are big, some recoveries are smaller. For example, Netflix is big recovery, but still not a recovery. A recovery will be how many percentage is this? It's 29%. Yeah, so if you would buy here last week, two weeks ago, and you sell it now, or now, you would be 18% in profit. Yeah, that was the recovery. So this is the average. So if we take the S&P from now there, that's 8%. Yeah, so you know that some companies are recovering 8, some 13, some 30, and yeah, this is why in SPX it looks that the market is recovering, but in reality, not really. For example, Netflix, I don't see it recovering now, but Netflix is such a undervalued, man. The distance, look at the distance between EMA and the bottom. Yeah, okay, that's not the info line here. That's what you want to use. That's 36%, man, only from EMA. That is absolutely crazy. Here it's 50%, right, or something like that. Yeah, 50% almost. So yeah, Netflix is like super undervalued now, and once and it's like, look at the volume. For God's sake, look at this volume, man. And volume is not going down at all. So Netflix to me looks good, looks really good. And if they will continue, I think we will briefly touch 21 weekly EMA very soon, in a few weeks. So yeah, the market is slowly recovering. In the index, you could assume that it recovered already, but it's not true. You cannot assume that. It recovered a little bit, most cases, but not much. But you still could, you could still take a lot of money there. So when you see candles like this is called I would call it capitulation. Yeah, this is a huge candle. I don't think we can see it anywhere. This is the biggest candle I've seen in Netflix, actually. Yeah, I don't think we have bigger there anywhere. So this would be capitulation 1. It basically liquidated all the positions. Let me draw it for you. It basically liquidated all the position here. Then it dropped off, liquidated all the position here, which was the previous support. So this was the support. This was the support, and the next one will be probably somewhere here. Yeah, here and maybe even here. There were 2 supports actually. Here, yeah. So it break. Oh, maybe here. It broke all 3 supports. So it was complete capitulation. Yeah. It also liquidated many positions here. As the support looks like it's somewhere here. So we basically screw up all these people, everyone who bought from here, here, and here, and it just got sold. And this is why the capitulation is so huge. And yeah, it just totally broke the market. I don't think it capitulate people here. It's not visible here. If it would capitulate people also here, we will go even lower. We will go to the next support, which is lying there. So that didn't happen. We stopped here. Yeah, we stopped on the support here, somewhere there probably. Where is the support? Where's the top volume? Probably somewhere here. Maybe here. Yeah, this seems like a lot of volume. So we recapitulated all of it, and now we are breaking off from this space. Yeah, with this candle. So now we are testing this, and yeah, I hope we will break up. Let me brush. Yeah, I hope we will break it off and start a little bit recovery, at least here. Then we will stop here. Maybe we will do something like this, retest the support, which is completely normal thing. Then we can jump here, jump there, and so on. Yeah, that is one case which can happen. That's a positive case. The negative case would be, of course, down. Yeah, that would be something like here, retest the support, and then we are going basically here. But now I don't see that. I wouldn't be that pessimistic. I still think that Netflix will recover and start testing this resistance. Yeah, it turned to resistance. Before it was support, now it's resistance. This one will become support for this run. So next week we should expect the retest of the $413 and then break it off. Yeah, but okay, that was a little bit of analysis of Netflix, but I wanted to show you something else. I wanted to show you Coca Cola, which I sold yesterday because I see how far it is from 21 weekly EMA. I don't know why, but I just wanted to check it. I sold a little position yesterday there, and I got yeah, it's 6% now from weekly EMA, which in Coca Cola is pretty big because the maximum they got was 7.59. Here it was 6.98, and every time we are going that far from weekly EMA, the Coca Cola tends to do one thing. It tends to do something like that. Yeah. So I will wait because I like Coca-Cola as a company. I will wait until it will probably test one of the supports here, probably here. It will go down 10%, retest it, and I will buy again, and we will go up again. Coca-Cola is a very stable company. But now we are quite overvalued, which is really strange. I didn't read the reports. I need to read it more, but yeah, let's check what's Coca-Cola doing in all those years. Everybody knows Coca-Cola, right? I don't need to introduce you what they are doing. You are drinking it, come on. If you don't know Coca-Cola, this channel is not for you, man. Like, really, get some life. If you don't know what Coca-Cola is, I don't think you are even living this life in this world, man. It's like you cannot possibly be in such a big bubble that you don't know what is Coca-Cola. So Coca-Cola, of course, is a big company which creates very famous drinks for, I don't know, more than 100 years, maybe. And yeah, I was very surprised about one fact I would like to tell you today. I will not go into deep to Coca-Cola. I would like to do a deep analysis probably next week. But let's just briefly check what we have here. Coca-Cola consolidated. I was very surprised how much debt they have. Very surprised. So yesterday we were talking about debt to equity ratio or assets to liability or how debt to assets, how they call it here. This is the yellow line. And yeah, it's not really, for most companies, not really healthy, but it seems to work for Coca-Cola pretty fine, you know? So let's check 2012, which means it was year before 2011. That was the price of Coca-Cola in 2011 was, let's take February for example, $39. Yeah. I would like to show you that Coca-Cola is growing over time, like very slowly. It has steep corrections. Yeah, but Coca-Cola is a very stable company. It's been with us for a very long time, and yeah, it's you cannot miss the target with Coca-Cola. But now it seems we're a little bit off. Yeah, we need some correction on Coca-Cola, that's for sure. And it's very interesting to see because you don't really see such a long-lasting company, and they are completely different than the companies I saw before. I really want to do a deep analysis of it because their assets are $1.3 billion and liabilities, so the things they need to pay, 1.2. So they are 90% in debt, man. So they have only 10% of the assets, so everything they own, only 10% is theirs. Everything else is leased. Yeah, so I'm not sure. I don't understand the business of Coca-Cola very well. It's a consumer market which I'm not very familiar with. So this is why I'm always telling people to understand very well the market and very well the product. I understand the product of Coca-Cola, but I don't know how it works, how the business works, right? They probably lease some machines, I suppose. They probably lease the machines from the companies and then sell the Coca-Cola in the machines. That would be one explanation. But I will try to find explanation. And if you can find the explanation for why the debt to equity ratio is so high in Coca-Cola, I will be glad to know. Because it clearly works. That company is on the market for 100 years or so. So it's very stable company. What they are doing is working. Nobody needs to introduce Coca-Cola in anywhere in the world. So I just wanted to show you that it's a different business than I showed you. It's not Netflix. It's not Tesla. It's not Zoom. It's not IT at all. And they have completely different strategy. And maybe this is the strategy everybody should follow. I don't know. Let's see. Income statement. That one is a little bit odd. Something happened here in 2020. I mean 2019. But yeah, the net income goes absolutely steep, and here goes absolutely dumpster. So, but yeah, the revenue is steadily growing. Something happened in 2021 or 2020. That was probably, yeah, of course. That's that one. We can explain all, right? We all know what happened because this is for 2020. So we all know that it was Corona outbreak, so people didn't go to the restaurants, didn't take Coca-Cola so much. So Coca-Cola actually got a huge trouble there. Yeah, you can see a huge loss there in the revenue. So yeah, that actually influenced Coca-Cola a lot. Let's look at cash flow. They have very strange cash flow. Red numbers means that it's worse than before. Yeah, I figured it out today. So if you see red number, it doesn't mean it's minus. It does mean only that it's the lower number than the previous year. Yeah, so every time you see green, this one is higher than this one. This one is lower than this one. This one is lower than this one. This one is higher than this one, and this one is higher than this one. This is why it's green and red. Yeah, here it is in the minus. Yeah, but yeah. So yeah, that's Coca-Cola cash. They don't have so much cash. They probably invest everything into. They are rotating money all the time, so it seems they don't have a lot of cash. 54 million for this kind of a company is not a lot of cash. What really surprised me is it seems that Coca-Cola is really bad in investing, man. Really bad. Purchases of investment is zero. Investment in property, plant, and equipment. They are minus in all those years. Acquisitions, that's something different. Acquisitions of other companies, that's probably or the expenses they needed to take to buy some other companies, some small ones, I suppose, some small drinks. But yeah, their investment seems to be really, really big and in minus. So that is really interesting. And I suppose that this is why the debt ratio is such a high. Yeah, because they are. I mean, they operate with the money a lot. They can operate with the debt on 90%. It's I think I've never seen before like 90% of debt. That would be like almost between before liquidation, but it's Coca-Cola, so the management probably knows what they are doing. I cannot fully explain why they are doing what they are doing, and I will try to dig in a little bit more of Coca-Cola, but it's a very interesting model. Yeah, when you look at the structure, the debt ratio, that's a really interesting model which seems to be working well for them. So yeah, I don't know what's the secret. Maybe you know. If you know, just give me a comment. If you find out why they are able to sustain such a high debt, I would be glad to know. I will try to find out. And yeah, I don't want this video again to be 20 minutes. So yeah, today we analyzed a little bit of Coca-Cola. Not so much, but a little bit. I wanted to show you that strange case with the high debt to equity ratio. That it seems not to be a bad thing anymore, right? It's not a usual thing. I can tell you, most of the companies you will see has under 50% debt to equity ratio, but you know, Coca-Cola doesn't, and seems to be working very well. So yeah, just to give you understanding how other companies are doing, and yeah, okay, that would be all. Bye bye.